Hi everybody! Welcome to the first video in a series I'm going to do. This is based on the model, the stock market matrix model that Ed Easterling first introduced in his book Unexpected Returns back from the early 2000s. I'm excited today because I've got several props. I'm not usually a prop person in these videos, but before we get into the model itself, let's start off with a little visualization. You can close your eyes if you want, but I want you to imagine that you're a sailor and that you love sailing. You have a sailboat, but you mostly love sailing when you get out onto the open water. You have to get from your position on the coast out actually 25, 30 miles out before you can get these nice clean winds that just blow very steady and let you sail all day in peace. The challenge is from your point on the coast out to about 25 or 30 miles, there are lots of challenges. You've got headwinds, you've got tides, you've got currents. Sometimes you actually have a tailwind that pushes you out, but you've got all sorts of variable conditions between the coastline and let's say 20 to 30 miles out, 25 to 30, you're in great shape. So once you get out onto the open ocean, steady winds, and you can just sail, sail, sail. So that is a useful visual metaphor because in the model, Ed Easterling uses colors, and we'll relate to some of those colors, but as you can see, there is a big section of white, lots of blue, and all these other kind of colors in between. Let's talk about this for a minute. So the white represents the land. The coastline is actually this diagonal line from the upper left down to the lower right. And you can see close to the shore, there's all these different colors representing different kinds of conditions. But once you get out past the coast by 20 to 30 miles, you've generally got this blue ocean. You've got lots of blue out here. That's where you want to get to. So the challenge is getting from wherever you are on the coast out. And for the purposes of the metaphor and the model, you're always leaving the coastline and sailing straight east, that's to your right, okay? So let's translate the visual metaphor into this model. The diagonal line here is actually the starting point of investing in the stock market. You can start back here in 1900, you can start down here in 2025, but you're always heading out in this direction in the model. What you'll notice is all these different colors here close to the starting point. You've got red areas, green, more red, more green. The red represents periods that are like headwinds, where you're losing money investing in the stock market. And this can go on for years. There's a thin diagonal black line that's 20 years out and represents like the 20 mile marker off the coastline. So lots of variable conditions here before you get 20 years out. Once you get past 20 years, really more like 30 years, you've got lots of blue. The blue represents long-term returns in the stock market in the neighborhood of 4 to 6% after inflation. And you can see the longer that you're in the market, the more likely you are to get those kind of returns. The shorter term, between 0 and 20 years, or even between 0 and 30 years, you've got a lot more variability on what kind of returns you're likely to find. The red represents periods when the market was actually losing money. So back in the early 1900s, here's the Great Depression. These are the 1970s. Down here, we've got the dot-com bust and the global financial crisis. Those were periods where for 20 years and sometimes longer, you actually lost money by putting your money in the market and keeping it there. The green actually represents headwinds. These are when returns were north of 7% on an average annual basis. So there are times, 1950s, the 1980s, when if you were getting into the market or keeping your money in the market at those points, that was easy. That was where Easterling uses the metaphor about sailing. You can just sail during these periods. If you're looking at trying to get out into the ocean during one of the red periods, you actually have to do some rowing because you've got some headwinds against you. Now, there's a lot more information in this model, and in future videos in this series, I'll go into a lot of that detail. But for now, I just wanted to introduce it to you so that you got an idea of what we're going to be looking at. Now, I am not a registered investment advisor or licensed investment professional, so I cannot give individualized investment advice, but we can have a thoughtful conversation and consider different ideas. With that said, let me share my disclaimers. Here's page 1. If you'd like to read the whole thing, please press pause. Here's page 2. Okay. Look forward to seeing you in the next video. My name is RJ Hickson, and I'm with Growth Guardian Investor.